Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh and Snehi Shah. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But Snehi, first up, let's take a look at what the US markets are doing and of course the GDP numbers that have come out of South Korea as well.
Well, absolutely. Good morning, Shreyansi. And a very good morning to all our viewers as well. Let's kickstart this show then looking at the global handover. Not much excitement coming in when we take a look at the intraday moves of Wall Street yesterday. Now, when you take a look at what happened in Wall Street today, Dow was absolutely flat, closed with a slight negative bias, down 0.1%. S&P 500 as flat as ever, but slight positive bias coming in over there. Just a 1 point uptick coming in on S&P 500. So, well, that closed pretty well as well. And Nasdaq also 0.1% uptick coming in over there. Nonetheless, in the green is where S&P and Nasdaq have managed to close. Dow has slipped very nominally into the red. But while these were the US intraday moves yesterday, stock futures then have fallen last night after tech juggernaut Meta Platforms reported its quarterly results. Traders are also looking ahead to the release of a key economic data later this week as well. Meta has plunged 15% in extended trading, as well as IBM is not doing so well on the other side as well, because that has also plunged in extended trading session. Now we'll take you through more about these numbers, these results, and why they have weighed on the markets a little later in the show as well. And these moves follow a mixed day for stock markets when it comes to the US intraday moves as well, because when you take a look at it, treasury yields have risen on Wednesday and they are placing downward pressure on stocks as well. Now the S&P 500, like I told you, closed rather flat, and the other two have managed to close in the green as well. The Dow has, on the other hand, slipped into the red nominally. But traders will also be watching out for first quarter reading of the US gross domestic product that is due later today at 8:30 a.m. US time. So we'll take you through those numbers as and when they come later in the day. Important data coming in from the US today, because the GDP number along with initial jobless claims are expected to come out today as well. And economists polled by Dow Jones expect that the real GDP will come in at 2.4%. So, well, we'll take a look at how that pans out. In other news, then let's talk about South Korea's GDP, because that is the big buzz maker this morning. In Asia, investors are assessing South Korea's advanced first quarter GDP growth of 3.4% on a year-on-year basis. This is the highest quarterly growth since the fourth quarter of 2021 coming in for Korea as well. So, well, good moves coming in when you look at what's happening in Korea in terms of GDP as well. And as of now, Kospi is slightly under pressure, though 1% down coming in. So, results are not, the GDP numbers are not reflecting very well on Kospi. We'll see later in the day if these numbers have or they provide any relief when it comes to Kospi. But also, let's take a look at what the European markets are up to. And, well, on the flip side, Europe markets are not doing pretty well. They have ended largely in the red. DAX is down almost 0.3%. FTSE is closed with a slight negative bias, and the Pan-European Stock 600 is also down almost 0.5%. So you have tech stocks that have helped European markets yesterday when you look at those basket of stocks in Europe, but momentum has been faltering in the European markets as of now. So the markets have ended the day in the red yesterday. On the flip side, US has ended the day rather flat. So that's the handover coming in from global markets. But Shreyansi, take us through what's happening with oil and what's happening with oil prices as well.
Absolutely, and it's very interesting. What we're seeing is a slight pullback after that 2% rally that we saw in the previous session. So when you're looking at traders' focus, that has shifted back to supply and demand fundamentals as the threat of war between Israel and Iran has faded. So when you look at price moves, then WTI was around that $82 a barrel mark, down 55 cents or 0.6% thereabout, and year to date, the contract is up more than 15%. Now, when you look at the Brent contract, then that was around $88 a barrel, down just 40 cents or 0.5%. Year to date, the global benchmark is also up about 14% thereabout. So that's the kind of picture that we've seen overall, and the market looks somewhat bearish at the moment with global oil inventories rising, as crude that was stuck on the water due in part to the Red Sea disruptions is now unloading, and that of course was something that Goldman Sachs also highlighted in their note earlier this week. And they've also said that this is reducing tightness in the market. They've also talked about how the geopolitical risk premium that was factored into prices is easing by another $5 to $10 a barrel in the coming months, and that is what they're picturing for oil prices. And the flow of oil from the Middle East has not been interrupted by conflict. You also have production that is growing in the US. You also have inflation that remains stubborn and OPEC that has ample spare capacity to roll back on the market in the event of a supply emergency. So that's largely the setup that you're seeing in oil market right now. And that is something that you've seen having an impact on oil prices as well. But when you look at gold, then gold prices steadied even as risk premium over tensions in the Middle East eased. And this is while investors strapped in for US economic data as well, that is due later in the week, for a little bit of cues about the interest rate path going forward for the Fed. Now, when you look at bullion prices as well, they have fallen over $100 after hitting a record high on April 12th. So that largely is the setup coming in for gold prices as well.
Well, absolutely. And with that, let's take a look at all the important events that you need to be watching out for in today's trading session. Today being a Thursday, it's Nifty expiry for the Indian markets. In terms of global cues, like we mentioned earlier, from the US, you have the very important GDP number coming out today, wholesale inventories along with initial jobless claims. So those will be the indicators to watch out for. From Europe, then you also have the economic bulletin that is coming out. Now, shifting focus back home, let's talk about some Nifty 50 numbers that are slated to be released today. 4 Nifty 50 companies will be coming out with their numbers today: Tech Mahindra, Bajaj Finance, Nestle, as well as IndusInd Bank. And well, that's not all, because tomorrow you have 5 Nifty companies reporting their numbers, the likes of HCL Tech, Shriram Finance, Bajaj Finserv, Maruti Suzuki, as well as SBI Life. But let's focus on today. Then in corporate action, you have the board of Inox Wind. They will be meeting to mull their bonus issue. Avantel as well as KPI Green will be declaring their final dividend as well, and BEML will also be declaring their audited results. In terms of the primary markets, J&K India IPO, remember this IPO opened day before yesterday. Today is the last day to subscribe to this IPO. That will be closing today. And in other events, Jio Cinema will be announcing a new subscription plan. You also have major earnings coming in from US. The US mega caps like Microsoft and Alphabet and Airbus will be releasing their numbers today. And the 2024 Auto China is also being held in Beijing starting today. So lots of cues to watch out for in India as well as globally. Keep a close eye on all of these cues.
And lots of stories to keep an eye on as well. Now, US President Joe Biden has signed into law measures to provide crucial aid to Israel, Ukraine and Taiwan. The approval concludes a 6-month saga of intense political debates in Capitol Hill. Biden expressed relief, stating, "We rose to the moment. The law allocates approximately $60 billion for Ukraine, $26 billion for Israel, and $8 billion for security in Taiwan and the Indo-Pacific."
Well, now remember, this bill has been signed amid rising protests against Israel across US colleges. Demonstrators demand an end to civilian casualties in Gaza, and the unrest follows recent mass arrests at the East Coast universities, reflecting growing discontent in the US. Tensions have peaked as police made arrests, citing concerns over academic freedom and student safety.
And speaking of bills, then TikTok is gearing up for a legal battle after US President Biden also signed the bill that would force its divestiture from ByteDance or face a nationwide ban. The social media giant was to challenge what it deems an unconstitutional law in court. With over 7 million businesses and 170 million users at stake, TikTok's CEO called the enactment a disappointing moment and reaffirmed the company's determination to fight back.
Well, let's talk about some US earnings then. And Meta has reported better than expected first quarter results, but the stock has still plummeted 16% in extended trading due to a light revenue forecast for the upcoming quarter. While headcount declined by 10% from last year, the net income more than doubled to more than $12 billion. CEO Mark Zuckerberg addressed concerns about investments in AI and emerging technologies, stating optimism about their future monetization potential.
Meanwhile, IBM is set to acquire HashiCorp in a hefty $6.4 billion deal despite reporting another revenue miss for the first quarter. While IBM's bottom line exceeded expectations, its revenue fell short. The acquisition aims to bolster IBM's hybrid cloud offerings with plans to deploy AI assistants to its consultants. However, IBM's shares dipped 9% in extended trading following the announcement.
Let's keep it going with the earnings then, and now let's talk about Ford, because robust sales of trucks and other commercial vehicles have aided Ford's Q1 earnings, largely offsetting losses from its electric vehicle segment. The company has maintained maintained its 2024 earnings guidance of EBIT between $10 billion and $12 billion. It has also lowered its capex expectations and raised adjusted free cash flow outlook for the year. And they've also said full year profit will track to high end of the guidance.
Meanwhile, US plane maker Boeing reported its first revenue drop in 7 quarters at 8%, reflecting lower 737 deliveries and 737-9 grounding customer considerations. However, it surpassed the analyst estimates, which was lowered after a January mid-air blowout of a door plug. The company also said that they expect to see an inline delivery for the month of April.
And China's economic outlook for 2024 has been revised upwards to 4.8%, fueled by a robust start to the year. However, concerns over deflation persist, with both consumer and producer prices expected to remain lower than previously forecasted, and analysts attribute the economic momentum to overseas demand and technological advancements. A property downturn is deemed as the top risk as of now.
Alright, then let's shift focus to Tesla then, and Tesla's co-founder and CEO Elon Musk has cancelled his India visit, and now his India plans seem to have hit a fresh hurdle. The EV maker is going through tough times, and experts also say that the dismal first quarter performance could also further delay India plans. ETNow's Sumit Chaturvedi is standing by with more details. Sumit?
Well, for Tesla electric vehicle major now, there could be more hurdles as far as India drive is concerned. This after yesterday's results and earnings call, where Tesla announced that more new cars will come from its existing plants. That is why there is less possibility new plants will come up in countries like Mexico and India. That's what raising questions about India's seriousness for Tesla as well. Well, Tesla yesterday announced earnings. The Q1 profit was down 55%. That's a massive drop in profit. Tesla has already announced 6,000 people more will be reduced, in addition to 10% of workforce reduction already announced. So not a good time for Tesla around the world, and India could bear the brunt because it may have to see the drive or Tesla coming to India getting delayed.
Alright, well, let's slip into a short break on that note. When we return, we'll take a look at how the Asian markets have opened up, and Shreyansi, largely reflecting the color we're both dressed in, is where the Asian market is today. But we'll take you through more details of that right on the other side of the short break.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at what the Asian markets are doing right now. And Asia Pacific markets took a breather after 2 straight days of gains, mirroring moves on Wall Street. In Asia, of course, investors will be assessing South Korea's advanced first quarter GDP growth of 3.4% year-on-year, and this is the highest quarterly growth since the fourth quarter of 2021. But on your screens, you do have Kospi that is down a solid 1%, over a percent as we speak. Let's also take a look at Nikkei then, a darker shade of red coming in for Nikkei. That is also down about 1.7%. Separately, the Bank of Japan also kicks off its monetary policy meeting on Thursday as investors monitor for action against yen weakness. Now, the yen slid past the 155 mark against the US dollar on Wednesday, hitting a fresh 34-year low. So that's what we saw yesterday. And the yen was still firmly beyond the 155 mark against the greenback right now as well. Let's also take a look at Hang Seng then. And that also is down about 0.4%. Let's also take a look at Shanghai. That also is in the red, but not as much as the other indices, down just 0.2% as we speak. Of course, markets in Australia and New Zealand are closed for a public holiday. So let's see how they open up tomorrow. But largely a sea of red coming in for all of these indices that we just covered. Now, back home, of course, we closed around the 22,402 levels. And what the Nifty implied is indicating right now is an open around the 22,354 level. So what you're seeing is a subdued start both on a spot and futures basis. And that is what we're penciling in for our markets back home as well, Snehi.
Well, absolutely. Tempered start is what is indicated for us today. But with that, let's also take a look at the power pack lineup that we have for you today on the market. Starting at 9:20, we'll be joined by Sunil Singhania, the founder at Abacus Assets Managers LLP, and he's going to be talking about where he's seeing value right now, the themes and sectors that he's positive on, and how to navigate the market that we're seeing as of now. Moving on at 9:40 a.m., we'll also be joined by the management of Equitas SF be. PN Vasudevan, who's the MD and CEO, will be joining us to talk about the company's Q4 numbers as well as the outlook going into FY25 as well. At 10 o'clock then, we'll be having Nikhil Nigania, the director at Bernstein, join us to talk about what's fueling the power sector and what is the reason that we've been seeing these moves coming in and what lies ahead for this particular sector. At 10:15, we'll keep it going with the earnings and we'll be joined by the management of the Indian Hotels Company IHCL. Puneet Chatwal, Managing Director and Chief Executive Officer, will be joining us to talk about the company's Q4 earnings. Remember, the company has posted largely an inline set of Q4 numbers. And lastly, at 10:45 a.m., we'll be joined by Sanjay Agarwal, the founder, MD and CEO at AU Small Finance Bank, to talk about the company's Q4 numbers as well and the outlook going ahead. Remember, the company has posted a rather poor set of numbers, not meeting street expectations. So we'll be in touch with all of these managements on their Q4 numbers and the outlook going ahead. So you stay tuned to ET Now today.
That's a power-packed lineup indeed, and keep an eye on all of those conversations. But for now, let's slip into...
Hi there, welcome back. You're still watching Market Cafe with us on ET Now. Let's take you through some stock-specific news then. And well, the biggest news has come yesterday after close of market hours, and it's a big setback coming in for Kotak Mahindra Bank as the RBI has banned the private lender from onboarding fresh customers through its online platforms. The central bank has also ordered Kotak Mahindra Bank to stop issuing fresh credit cards. So Ankur, my colleague, is here with all of those details. Ankur, what has led to this strict action on the bank? Why such a sudden move coming in? And why to such an extent? Why is it so serious? Help us understand all of this.
Yes, Reserve Bank of India has taken an action on Kotak Mahindra Bank, and now fresh additions in online and mobile banking of customers as well as fresh issuance of credit cards will not be possible for the bank till the time this embargo is there. However, there will be no impact on existing customers, and that has been specified by the regulator. Now, why this action has been taken? Because there has been repeated instances of lack and deficiency of IT infrastructure working properly as per regulator, because there has been assessment of the years between 2022 and 23, and after continuous engagement with the bank and the bank giving a reply, the regulator was not satisfied with those answers. In fact, an instance of 15th April was also mentioned by the regulator where the customers faced problems. Remember, we at ET Now had also reported the instances where several customers had faced issues with withdrawal of their money from the bank. There were also instances where the customers were not able to do the normal banking services in the branch also, because there was an issue with core banking server of the bank, and therefore since main servers was down, there were issues throughout the day for customers, and regular banking services were impacted. So all in all, the bank needs to take corrective actions. In fact, an audit needs to be conducted by the bank, and after that external audit which is completed, only then Reserve Bank of India will review the action.
All right, Ankur, thanks so much for taking us through that. Now, in the latest update, we do have a statement coming in from Kotak Mahindra Bank. They've said that they've taken steps for adoption of new tech to strengthen their IT systems. They will work with the RBI to swiftly resolve balance issues at the earliest, and they also reassure the existing customers of uninterrupted services. But despite this relief statement coming in, we'll keep a close eye on how this stock performs today, because the quantum of this rap on the knuckles, you could say, by the RBI is quite large for a bank as large as Kotak Bank. But Shansi, well, this is on the news front, and this is everything that has happened with Kotak Bank. We have fresh brokerage notes also coming in this morning, trying to gauge the impact of this move. So take us through that, and what are these notes saying?
Absolutely, lots of them, and it's a very interesting take coming in from the brokerages as well. But let's take a look at what Jefferies also had to say. They're maintaining a hold on the counter. They're cutting the target to 1,970 from the previous 2,050. And what they're also flagging is that HDFC Bank took 15 months to clear similar issues as well. And they're also saying that revenue and costs will be hit if resolution takes more than 6 months. So that's the word coming in from Jefferies. But when you look at what Nomura also has to say, they're also talking about how these curbs will be impeding medium-term loan book goals as well. And they're saying that reputational impact can also come in for the bank. So this is something that Nomura is flagging. Now, when you look at what Investec is saying, they're maintaining a buy on the counter with a target at 2,300. They're quite bullish in that regard, but they're seeing a marginal impact on earnings. They're also talking about how there's an exposure to credit cards that will be reducing over 2 quarters. And they're saying that lower card business can also impact ROAs as well as EPS in financial year 26. So that's the word coming in from Investec. Lastly, when we also look at what Bernstein is saying, they're maintaining a market perform rating with a target at 2,100. And they're talking about this being a broader ban. They're also flagging the same thing that we saw Jefferies flag out with the HDFC Bank taking 15 months to clear similar issues. But they're saying that this appears to be part of a broader ban coming in on Kotak Mahindra Bank. So that largely is the word coming in from Bernstein as well. So this is largely the takeaway from brokerage notes.
Well, absolutely. And when you take a look at these brokerage notes, there's no single consensus on what these brokerages are, eyeing for Kotak Mahindra Bank going ahead. A whole list of diverse views coming in. So we'll actually have to wait and watch what happens to Kotak Bank on the back of this news flow. But let's keep it with banks and let's talk about earnings now. Axis Bank is the company or is the counter in focus because that has seen its quarterly PAT rise of over 17% for its Q4 numbers. NII has come in line with expectations. Operating profit has also soared above projections. Additionally, they've also gone ahead and announced a final dividend of 1 rupee per share. So, well, largely a good set of numbers coming in for Axis Bank as well. But my colleague Gaurav, who tracks the sector closely, is joining in with more details and breaking down this earnings for us. Good morning, Gaurav. Take it away.
Well, yes, if you look at Axis Bank result, 4Q numbers actually were strong. So, for example, in Q4, Axis Bank's net interest income increased almost by 4.4%. This was, and if you look at the PPOP, that increased almost by 15.5%, and PAT actually increased by 17.4%. So, if you look at the scorecard, actually net interest income was actually in line with what the street was expecting. But if you look at PPOP or PAT, it was above the street's expectation. Apart from that, we also saw some kind of higher fee income in this quarter, which actually led this growth in PAT. Apart from that, if you look at the GNPA and NNPA ratios, those also declined. So, for example, that was actually positive. So, GNPA actually improved by 15 basis points, net NPA improved by 5 basis points, and now it stands at 0.31%. Credit cost actually was almost, we could say, flat because it was at 0.32% versus what we have seen in the last quarter at 0.28%. And this overall impact on NIMS was actually positive. So, net interest margin improved by almost 5 basis points to 4.06% versus street's expectation of 3.9%, which was actually positive for the bank. Coming to the advances and deposits now, advances grew almost by 14.5% on a YOY basis and 3.5% on a quarter-on-quarter basis. And in this advances, if you look at the corporate book, actually, that was down 3% on a sequential basis. Talking about deposits, now they stand at 10.69 lakh crore, which is up 12.9% on a YOY basis. And in this quarter specifically, there was something to highlight is that bulk deposits, which were up 4.8% on a sequential basis, contributed only 18% of the incremental deposits that we have seen. So that was a key concern because in this last quarter we had seen that 86% of the incremental deposits were coming from bulk deposits. Apart from that, bank has said that in the medium to near term they will grow somewhere 300 and 400 basis points above the market, and in the near term deposit growth would be a key to watch out for in the loan growth. So all in all, a positive commentary coming up from management also. Numbers were also strong, and lastly they have also approved the issuance of equity via QIP worth 20,000 crore rupees. But they have also said that bank is actually well capitalized. They have actually accreted 44 basis points in CET1 in FY24 itself. So they do not need any kind of fundraising to say in the near term, but they have just approved the fundraising. So all in all, a strong and positive word coming up from the management as well. We will definitely keep an eye on Axis Bank because of the strong results and a positive note coming up from the management.
Well, absolutely, Gaurav. We'll keep an eye on the impact then, but switching focus to FMCG major HUL that reported quarterly numbers in line with street expectations. When you look at revenue for the fourth quarter, that came in slightly lower. Well, when you look at profit, then that fell about 5.7% as well. Vinny standing by with the earnings fine print. Vinny, overall an inline set, but optimistic outlook then?
So yes, in terms of numbers that have been reported by HUL, it's an inline set of numbers with what the street was expecting. Nothing much of a difference there. Revenues around 14,800 crores is what we saw. Profits a slight bit of a decline of 5%. And margins a slight bit of a contraction that we saw, 23.12% versus 23.3%. So slight contraction there. But what is the key highlight that we're going to talk about is from the press conference that we have in terms of obviously the management remains optimistic in terms of the outlook going forward. They said that yes, they're fairly optimistic even in terms of the volume growth. They are aiming to achieve that 4 to 5% volume growth that they had been in the past as well. This year was around that 2% mark. So yes, they want to go up towards that level. They are saying that rural is recovering, not at a fast pace, but they are seeing signs of recovery there. And that is what one could highlight, is that yes, we will see recovery there. Now obviously this time around, mainly the pricing growth. There was not much of a pricing growth that we saw. So that will get stabilized in the first half of the year, and then from the second half of the year, we will see the pricing as well as volume growth coming in for the company. And second half of the year, they are expecting slight bit of a marginal price hikes that one could see. Now, other than that, in terms of Horlicks, they did say that they expect to continue to stick to their current marketing strategy. They will stick to their strategy that they've been following, focusing that there is a lower penetration in this segment. So yes, there is room for opportunity there. They are in talks overall. HUL uses the least portion of sugar, they said, in terms of Horlicks versus other brands, and they are fully compliant with the authorities. And they do not need any much of a difference in that. So yes, keeping an eye out on that. They're growing their market share there, the penetration there. So yes, that's the key highlight that we have. The management continues to be optimistic, and the volume growth is what we could see coming in from next year at least, is what their focus area is.
Well, thanks, Vinny, so much for taking us through that. And here's what we also got from the management. Here's what they had to say about their recent announcement about their foray into the ice cream segment. Also, they spoke about rural demand and the outlook going ahead for the company. So listen into what they had to say.
If you pull back and look at ice cream over the last 4 or 5 years, we've had a very strong clip of growth. It's not surprising. We're a leading player in the industry. We've been in decades in the market. The ice cream market is sizable by scale for our income status as a country. Therefore, the opportunity in the headspace for ice cream as the country gets more affluent, as people consume more food out of home, impulse is only strong. And we're all in at this point to sell in for the summer, which, as you know, is going to be nice and warm. And we are at this stage focused on just doing that, innovating aggressively and making sure that our products are available across the length and width of the country. Specifically to your point about the Unilever's position on ice cream, we are under evaluation, exploring all options.
The way we see on rural, we had spoken about that rural usually is always accretive to FMCG demand. And we had seen that was an area of overall business which had seen in macroeconomics, given the amount of cumulative inflation and the demand outlook, we'd seen a purge of disposable income. And hence we'd seen rural demand coming off. That we've started to see gradual recovery as we had expected. Is it playing the role of being accretive to FMCG? Answer is no. But is it improving sequentially? Answer is yes. The hope we have seen good forecast for monsoon, and with overall macroeconomics, I do expect that recovery to continue to happen. What is leading the growth for FMCG this point in time is urban. What is leading growth is organized sector, which is modern trade and e-commerce. What is leading growth is premium.
Well, that was the word coming in from the management, but let's also take a look at what the brokerages have to say. And Goldman Sachs has come out with a note where they're maintaining a neutral stance, cutting the target to 2,475 from 2,550. What they're flagging out is that they're talking about the weak performance that will continue. They're saying that soap recovery could also take a few quarters, and they're seeing some recovery in food and refreshments for HUL. They're also saying that HUL is investing in premium segments of each category, but it may remain muted in the near term, and that's the verdict coming in from Goldman Sachs on HUL.
Well, absolutely. Let's keep it going with all the earnings then. And LTIMindtree is another Nifty company that came out with its numbers yesterday. They've reported a consolidated net profit crossing 1,000 crore rupees for the January to March period. This marks an almost 6%, to be precise, a 5.9% decrease from the previous quarter and falling short of analyst predictions. The fourth quarter revenue also experienced a 1.4% sequential decline to around 8,800 crore rupees, and the company has announced a final dividend of 45 rupees per share. Let's listen in to what the management had to say on this.
As far as the growth is concerned, as I said in our prepared remarks that we did this quarter Q4 was a one-off, but we will get back to growth in Q1, and I think that's the best we can say at this point of time, keeping all the other macro and macro scenarios in mind. And as far as leadership attrition is concerned, the merger is pretty much out of the way. So there was a little bit of, we expected some attrition during the merger time, integration time, but that is all over 1 year back. So whatever attrition you see at this point of time, it's pretty much as part of BAU. There's enough leadership bandwidth we have to, tide over that, and that's what we have been doing, and that's kind of reflecting the performance of the company as well.
Well, a whole host of earnings covered in this segment, Snehi. But with that, let's also take a quick break, and when we come back, we'll take a look at some more stock-specific news.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. Let's take it across to my colleague Ansh and take a look at what the FNO snapshot is looking like for the day. What are the derivatives expected to pan out and shape out to be? Ansh, take it away.
Right, so starting with Nifty first, as you can see in the chart as well, 20 DMA is trying to push Nifty on upside, but Nifty is getting scared from that 22,500, 520 level. Index needs to overcome this fear and go above that 22,520 decisively to be positive. On option front as well, we are seeing call writing happening at the very same 22,500, indicating option traders are also expecting Nifty to face resistance around the same level. Today we have a monthly future and option expiry as well for the Nifty, and this series index is up merely by 0.3%, almost flat we can say, whereas rollover so far is 56.3% as compared to 77% of 3 series average. We have one session left, so we may see some spike in rollover data today. Moving on to Nifty Bank. So index seems to be actually resembling the Nifty's behavior only. Here as well, 20 DMA is trying to support Nifty from downside. Upside resistance is around 48,500. Whereas if we talk about index options, we are seeing call buying happening at 48,500, indicating traders are expecting Nifty Bank to go around this level. Whereas on downside, we are seeing put writing happening at that psychological level of 48,000, indicating good support base around this level. Today we have first day of May month series for Nifty Bank, and seasonality data shows minus 0.5% average move in May series, which is a bit of cautious to neutral indication for the Nifty Bank. Moving on to FIIs. In the previous session, let's see what FIIs did in the previous session. In index futures, they covered around 13,000 long contracts. They added around 2,000 short contracts. Net to net, we are seeing reduction of around 15,000 contracts, due to which the total long position has come down from 34.3% to 31.5%, which is a 17 session low. With this, the total short continues to be heaviest in almost 3 years, and the total short has actually increased by 80% if we see in this series. So this shows that pessimism in the market. But we are still hoping and waiting for this pessimism to get into short squeeze, which will be positive for the market. Lastly, let's have a quick view on stocks as well, which will be in focus. And we are seeing a long build-up happening in United Breweries, Chambal Fertilizer and NMDC, where short build-up for MCX. So keep an eye on the stocks.
Well, absolutely, Ansh. We'll keep an eye on all of those counters. But let's switch focus back to earnings then. IndusInd Bank is set to report its Q4 numbers, and uptick in NII as well as profit is on the cards, while names are likely to remain stable largely. Gaurav is standing by with what the street is penciling in. Gaurav?
Well, yes. Talking about IndusInd Bank, they will come up with their Q4 results today. And if you look at net interest income, now the street is expecting this to increase almost by 17.5% on a YOY basis. PPOP can increase almost by 9.7%. And now street is expecting somewhere the strong loan growth benefits can be offset by the high cost of funds in PPOP. And apart from that, they are also expecting provisions to go down, which would result in PAT increase of almost 15% on a YOY basis. Now talking about the bank's positive side, street is expecting somewhere the high yielding segments, repayment of high cost borrowing can actually offset the cost of increasing cost of deposit for the bank, and which could result in net interest margin remaining stable at the range of 4.3%. Lastly, if we talk about the provisional updates from the bank, we have already seen that the advances grew almost by 18.3% on a YOY basis, while deposits growth was at 14.4%. Although the deposit growth was actually slower if we compare it with the other private banks who have reported the provisional updates. This was basically because of the retail deposit outflow of 2.7 thousand crore rupees that the bank has seen because of the regulatory action on the fintech partner. And apart from that, if you look at the IIB, it has actually weakest retail deposit growth among the reported banks, and CD ratio is also at a comfortable level. So that means that we may see some loan growth coming up in the bank coming ahead. But lastly, we will definitely keep an eye on how management is penciling in this loan growth, and also about the credit cost, because last time we saw that management actually used some kind of contingent buffer. So any kind of contingent buffer that they are creating in this quarter could be a key to watch. And lastly, any kind of commentary coming up on the cost of funds will also be important from the management in terms of IndusInd Bank for its share price to go ahead. So all in all, definitely keeping an eye on how the management commentary is coming up, but Street is expecting a strong set of numbers for this bank.
All right, strong set of numbers penciled in for IndusInd Bank. Thanks, Gaurav, for taking us through that. Let's also talk about another Nifty 50 company coming out with its numbers today, and that is Bajaj Finance. A healthy set is expected by the street when it comes to Q4 and FY24 earnings for Bajaj Finance. Good growth on both top line and bottom line being seen. Net interest income seen at 8,077 crore, up almost 29% on a consolidated year-on-year basis. PAT is also seen at 3,661 crores, up 16%. Operating profit, it's penciled in to grow by almost 31.5%. NIMs on the other side are expected to contract slightly, coming in at 10.3% versus 10.5% this time last year. Also, when you take a look at the asset quality, now let's look at it on a sequential basis then. Return on assets, a very good performance is expected on this front, at least because that is being penciled in at 12.6% versus 4.9% just in the last quarter. That's a big jump coming in a short period of time. On the other hand, return on equity is seen to be slightly tempered at 19.6% versus 22% in the last quarter as well. Provisioning is seen up 4.5% when you look at it on a sequential basis as well. Now, when you talk about the company's Q4 updates, the management had said that FY24 AUM is expected to grow by 34%. The deposit book is also expected to grow by 35% on a year-on-year basis. So we'll see how those numbers pan out today as well. But here's what we can expect largely when it comes to Bajaj Finance's Q4 numbers. NIM contraction is expected to continue. Provisions are expected to rise just marginally. Cost to income ratio is expected to remain steady. Credit costs are expected to decline roughly by 5 bips. So that's a slight slip coming over there as well. And cost of borrowing is expected to increase. However, the key monitorables here will be growth trajectory going ahead, especially their asset quality in the unsecured portfolio. RBI actions coming in on the EMI and e-com cards. Management succession and transition plans, and lastly but probably the most important one, the plans for the listing of their housing subsidiary. So we'll be watching out for all of this commentary as well. But yes, a broadly good set of numbers expected from this company.
Well, we'll keep an eye on the earnings for Bajaj Finance, but let's keep it going with earnings then. Nestle is also all set to report its March quarter numbers. Will it be a good show? What is the street penciling in? Vinny standing by with the snapshot.
So yes, in terms of numbers that are expected from Nestle, it's the March ended quarter. Do not forget that this time they're changing from calendar year to financial year. So yes, we are keeping the March ended quarter in focus. Standalone numbers, what we look at, 7% growth, a decent growth in terms of overall the revenue of the company, profits of the company, a strong growth, a double-digit growth of 15% for Nestle, while margins expected to see a sharp improvement, 24.1% versus 22.7%. So yes, around more than 150 basis points in terms of improvement in terms of the EBITDA margins of the company. Volume growth expected at 3 to 4%. So let's keep an eye out on that. This high revenue growth is because of the distribution expansion that they've been focusing on. They're focusing on the rural strategy as well. So those initiatives they've taken over there is something that could work out well for overall Nestle's numbers. Now, we're keeping an eye out on the chocolate as well as nutrition segment. That's expected to see a steady growth. International business likely to see a bit of a decline there. While obviously in terms of margins, keeping an eye out on that. YOY, we're seeing an improvement sequentially because we've seen those costs seeing an increase on a sequential basis. Maybe we could see a reduction there. Now, let's keep an eye out on raw material cost commentary. What are they seeing in terms of the pricing going forward? Other than that, commentary is going to be important in terms of the rural players. How is that shaping up? Rural versus urban and regional players is key to watch out for. And any special commentary on the baby food segment, given that there were concerns around the sugar in the food content, that is something key to watch out for from Nestle.
All right, thanks, Vinny. But Tech Mahindra is also going to come out with their numbers, and let's take a look at what is being expected for Tech Mahindra. Now, on a quarter-on-quarter basis, the dollar revenue is expected to have a downtick of about 1%. When you look at EBIT margin, the expectation is of an expansion to the tune of 160 basis points for the EBIT margins. And when you look at profit after tax, then what is being penciled in is an uptick of about 37% thereabout for Tech Mahindra's profit after tax. But let's take a look at what else is being penciled in for Tech Mahindra. And there's the constant currency revenue that is expected to decline at 1.4%. There's weakness in enterprise as well as telecom business that is being seen. And they're also saying that we're also expecting that retail may be hurting growth. In fact, business restructuring cost in Q3 may also be hurting margins, and that's something that the street is keeping an eye on as well. Now, in terms of deal wins, what Jefferies has come out and said is that they've talked about how it's going to be to the tune of $600 million. So that was the verdict coming in from Jefferies. But in terms of factors to watch then, and what you can expect from, what you should be looking out for Tech Mahindra, is largely the new initiatives by the CEO, TCV deals and pipeline as well, and margin levers as well as financial year 25 outlook and 5G commentary that will also remain in the spotlight for Tech Mahindra. So largely that's the expectation for Tech Mahindra.
Well, absolutely. So we'll be keeping a close eye on all of these Nifty 50 as well as other companies that are coming out with their Q4 numbers today. But viewers, with that, we're completely timed out on this edition of Market Cafe. From Shayan, Simi and the team that put this show together, thanks so much for watching. But as we bid you goodbye, you stay tuned to the channel. Don't go anywhere because the market takes all of the action ahead.